5, I believe. I don't know. Well, good evening, everyone. This is day 4 of the option trading challenge, and I got into 2 positions today, closed those positions, and I closed one of my stock share positions. Let's talk about it. And I also want to talk about gambling. Is the stock market gambling? Well, yes. Hell yes, it is. Absolutely. If you don't have a plan, if you don't know what you're looking for, if you just want to buy into some random stock and hold on to it, chances are you're going to lose your money. High probability you will lose your money. Is day trading and swing trading what I'm doing here? Is this gambling? Yes, I proved that yesterday. This is gambling. If you do not stick to a plan, it is 100% gambling. You will lose your money. I took an $80 loss yesterday because I gambled. I didn't really potentially gamble. I had a plan. I started out with a plan. It was going in the right direction. I had profits. I got greedy, and then I gambled the profit, and that position turned against me. And instead of getting out of that position once it turned against me, I let it ride out to see if it would recoup the end of the day. It did not. That is gambling, 100%. Today, not a gamble. So let's talk about strategy, all right, and what to look for, how to look for. So there are stock chart indicators. There's the simple moving average, there's the MA5, the MA9, the MA200, things I don't use. There's the Fibonacci, there is the MACD, there is the VWAP, there's the RSI. I don't know. I could probably say for 10 minutes telling you all these different kinds of indicators. To me, they're not useless. I just don't use them. I have a very simple strategy. I think history repeats itself. Based off of history repeating itself, I look through the stock charts. I look back 180 days. I find significant price targets, price strength, and price weaknesses. I draw these lines in the places where I think the stock had strength and it had weakness, which is support and resistance. And I had set alerts, notifications that tell me if a stock gets past a certain dollar amount, and I hang out and wait. I wait for the trade to come to me. I don't chase the trade. Chasing the trade, you lose. So the plan on this one, this was a kind of a scalp. I only made 16% on this. I risked $69 and I waited. So my alert went off, 228.86. Alarm goes off. I see that this here has turned into resistance. I waited for this bounce here. The second it hit this line that I created and started to pull back, I bought a contract for $69 for a 237 strike price. So this hit here, my indicator went off. We took a bounce. $69 was the risk. It broke above this line. It actually did it really quick. It immediately turned it into support. Took the first bounce. As soon as I seen the candle turn red, start to come back, I sold out of the position for a 16% gain on this one. And you wouldn't, it'd blow your mind if you knew how much 16% was on $69. It was $10. So I took $10 off of that one. I made another trade here on Virgin Galactic. And this also was a scalp. It was a quick play. There was only $15 of tradable funds left. So alarm goes off. I'm looking for the price strength. I see a bounce right here. Bought in on the bounce. On the upside of the bounce, I wrote it up here. So I got in at $14. I got one contract at $14. I think about the contract was like a $17 strike. So in like 10 minutes, I believe it was 10 minutes. Where was it at? It was like 11. No, it was later on in the day. So it had to been somewhere around 12. Took the bounce, and this was a 22% increase on the money for a total of $3. So it's $13 of increase. And then the last one was the shares of Viacom, or Viacom, VIAC is the stock ticker. I had 3 shares at $14.50, and that was up to 21.35, I believe, today. And so I got out of those 3 shares for 60. I think $64. 64, $65. Anyway, that was a 50% increase on those 3 shares. So it puts the account at 162.07 of tradable funds. There is still 74.63 in positions, and I know the account's still down. So, and I understand too that those are very small positions and small plays, but I'm trying to make a option trading challenge that goes up, not a how to lose your money with options challenge. I got a lot of insight on how the market works, things to look at, how they function, and how to have risk management, because it's all about risk management. If you're not making a plan, you will fail. You'll lose your money. And that goes with anything. If you're not making a plan, you're planning to fail. And trading the stock market, it is simple. It is very simple. I won't say it's easy, but it is simple. Strategy, slow and steady wins the race. So if anybody tells you stay out of the stock market, it is gambling, I agree. Stay out of the stock market. It is gambling. But if you want to learn and you want to grow in the stock market, what you do is you sign up on something like Webull, which, shameless plug, I will leave a link in the description. It is free to sign up. There are no hidden fees, nothing crazy like that. You could trade with as little as $10. If you'd like to get a free stock, and I get a free stock too if you sign up, and you deposit $100, you and I will get a free stock. Anyway, that aside, you can get Webull for free. Download it. You can do it right now. You can hop in the App Store. Don't even use my link. Just get Webull just to use this. This is a paper trading account. If you want to get into trading just to see how it works, follow some charts, look at the history, get an idea, make a plan of where it's going to go. I think these things start out with $1 million. You can lower it down to $100. You can create this amount to be whatever you want it to be, and you can practice. It doesn't cost you anything to do it. I think there's a very small delay on it, but you could see that I think Facebook's going to hit 260. I really believe it's going to hit 260. So you could say, I wonder if Johnny's right. Then you could get yourself a Webull account. You could go into the paper trading, buy Facebook at 232.72, and then just ride it out and see how far up it goes. You could buy the 1 share, or you could use the fictitious $1 million and see how far you would get with $1 million in the stock market. But like I said, if you're not making a plan, if you're not creating some type of risk management, you're gonna lose. It's just how it is. You're gonna lose. But I wouldn't say this is gambling. You can turn it into gambling for sure, 100%. But the difference between gambling and the stock market, you're 100% in gambling. And if it goes against you, you're out 100%. Stock market, if this starts to go against you, if we got a position, we're in 100%, and the probability is a 90% probability we're going to lose, we can take out 90% of our position. Can't do that. Roulette, you're in 100%. If it looks like the ball is about to land on red and you got in at black and it's the last couple of bounces, you're sure you're going to lose. You can't look at the people and say, hey, can I have 90% of my money back? They'll laugh at you. In the stock market, you can say that. You can say that for sure. You can say, if this price target drops below a certain amount, which might be 10%, so you divide out 10% of whatever your price purchase is, and if it gets down to that 10%, sell, get out, keep 90% of your money for tomorrow or a week from now, and then you have to set when you're going to get out. I want a 25% or 10%. The average stock market profit is 2% over the year. 2%. That is super small, and that's actually very lucrative. If you double down and compound your money, 2% over the long course of time is very lucrative. I did a total of 20, 30, 70, 78. I did 78% gain on the amount of money that I had in the market today. That's really good. I had a really small amount of money in the market today, but that's really good. If you can keep those things up, if you can do 5 to 10% a day and compound that, at the end of the year, you're going to be very, very happy. Anyway, have a great night. Stay green, my friends. I will see you tomorrow.